Can retirement savings accounts be used to replace all taxes based on income? This retirement calculator will go back 45 years and compute the monthly interest-only retirement for a person that started out back in 1967 making $1.40 an hour. His starting income would be $2,912 a year, and in 2011 his income would be $15,080 per year, or $7.25 per hour. Total principal invested during that 45-year period is only $23,770. The retirement account total principal interest is $387,155, and the monthly interest-only retirement in 2012 is $1,291 per month, compared to the calculated Social Security income of $944 a month. These amounts are based on saving the 3.9 to 6.2 FICA tax for 1967 through 2011 and the annualized return of the S&P 500 for those same years. It computes the monthly interest-only retirement income based on a 4% interest rate. Now let's look at the median household income for 1967 of $6,156 per year. 2011 it increases to $49,142 per year. The total amount saved, principal and interest in the retirement account, is $1,070,457, which gives you a monthly interest-only retirement income in 2012 of $3,568 per month, compared with Social Security of $1,961 per month. During that 45 years, we had a gain of 798.31%, and we're going to use that when we look forward 45 years. In the next example, we're going to start out in 2012 making $7.25 an hour, which is the minimum wage, and we're going to increase that to the median household income computed using the gain that we saw in the prior example of 798.3%. You'll notice that the retirement account total principal and interest is less than what it was in the median household income, where we had over $1 million in that account. The difference is the amount saved is fixed at 7% per year, and the return on our investment is 8% compounded annually. We use the actual numbers from 1967 to 2011 to compute the retirement account total, principal and interest, using the median household income from 1967 to 2011. Those annualized gains for the S&P 500 averages out to be over 10%. If we increase our return on investment to 10%, our retirement total now is equal to over $1.6 million, with a retirement interest-only payment of $5,559 a month. The NiftyTax.com lays out in detail how these special tax-eliminating retirement accounts can replace all taxes based on income. It allows husband and wife to both have a retirement account of equal value, and after the death of both husband and wife, the balance in the account goes to the government instead of paying taxes every year. If this tax concept were put in place, by the year 2076, all taxes would be coming from these retirement savings accounts. There would be no income taxes. Everybody would be able to save for retirement and spend the rest of their paycheck on their family, and the government would be receiving better than $6 trillion a year in revenue. Being able to opt out of the retirement portion of Social Security but still retain the aid to dependent children and disability features of that program will give you monthly retirement income much greater than Social Security retirement. By the year 2056, all retired couples will be millionaires, and there'll be no more need to shop around for senior discounts.